moving on from Flipkart. Investing firm Tiger Global has exited from Indian e-commerce titan Flipkart, selling its remaining stake to Walmart for $1.4 billion. Tiger Global's association with Flipkart dates back to 2009 when the firm injected close to $9 million into the burgeoning e-commerce company during its Series B funding round. At that time, Flipkart was valued at around $42 million. Over the years, Tiger Global seemed to fortify its faith in the Indian unicorn, infusing an additional $1.2 billion into the online retailer in subsequent rounds. Fast forward to 2023, and the landscape has evolved dramatically. Walmart had previously acquired a 77% stake in Flipkart in 2018. Recently, it purchased Tiger Global's remaining shares as well as those of other investors, solidifying its position in Flipkart. The secondary purchase priced Flipkart at about $35 billion. That being said, this figure reflects a slight decline from the nearly $38 billion valuation the company secured in a late-stage primary deal in July 2021. Despite the change in valuation, Tiger Global reaped gains of about $3.5 billion on its investment in Flipkart. During the pandemic, Flipkart was set to lose less than 7% of its value over 2 years. So why could Walmart have increased its stake? This can be attributed to the company's strategic intent. Instead of gaining financial gains, the US retail giant may view the acquisition as a strategic move to enhance its presence in India. This may also be Tiger Global trying to find liquidity where it can, while Walmart is trying to reinforce its foothold in the Indian e-commerce space. And which other firm is selling shares to Walmart? Axel. This is set to generate a 20 to 25x return, totaling about $2 billion. And what about the remaining Bansal? Vinny Bansal, co-founder of Flipkart, who had retained a small stake in the company post-acquisition, has also parted ways with his remaining shares. Co-founder Sachin Bansal exited in 2018. He is said to have reaped around $1.5 billion since the company's inception. Despite this exit, Bansal will continue to serve on Flipkart's board. Investors may live by exit, but it seems like founders accepting the E-word could be something else. At some point maybe, these tech founders may realize that their financial resources and what they bring to the table in terms of ideation and disrupting the status quo may not be enough to enable their ventures and the speed desired to capitalize fully on opportunities available. And in bringing on more and more investors, they may pay a heavy price, giving up total control over their company. And what about Flipkart's future prospects? Maybe their funding faucet is not shut off yet. It is said that Flipkart's capital, which it raised in 2021, may almost be depleted. Walmart's investment in Flipkart is likely to remain strong. Walmart may be well positioned to provide the majority of the financing for this phase of growth as India's pioneering unicorn navigates the evolving market dynamics. What could it mean for India's startup ecosystem? What does the future of Flipkart look like?